Hello, my friends. I'm Rocky Outcrop. This is Bitcoin and Ethereum technical analysis. Bitcoin has dropped about $600 or so. Ethereum's dropped about $20 to $30. Let's take a look at both of them and see if they have retraced enough to get a higher low in, or if we have more negative price action in store for us. I'm just going to shrink myself down into the corner. Before I do though, check out, you can see my screen just here, and that's the screen which I've got in the background. Excellent. So you can see me looking at the screen as you look at the screen together. How good stuff is that? Let's just dive into the charts. Hi my friends, thank you for joining me then. Let's take a look here, and you can see the market is in perfect equilibrium right now. It's absolutely wonderful. I just wanted to show this because this very rarely happens, of course, and it's very, very interesting to see. If you look at the highs over there in June 2019 over to the highs that we've had just here in October 2020, you can see that the market has got a perfect equilibrium, looking between the highs over here down to the lows in March up to the highs again. If we draw in a trend-based Fibonacci extension, go from those highs down to these lows up to these highs, then you can see that that lines up perfectly with this fib channel that we have in the background. The fib channel, if I just make it more visible by flashing it at you, and you can see that that also lines up perfectly with the Fibonacci extension, Fibonacci retracement tool from the lows in March over here up to the highs in October. We're in this perfect state of equilibrium. So let's just take a look between where the prices are down to the 236, and we'll take a focus on this section of price action during today's video, from the highs up there down to the lows in around about the 11,500 area. And as well, we'll also acknowledge where we could see the prices go next should we go on and continue up towards the top side. Well, first off, we'll do that acknowledgement of the higher areas just real quick using this Fibonacci extension that we've already been talking about for the last wee while over here. This is, of course, Fibonacci drawn in from the highs that we had in August down to the lows in September, which then extends on up towards the top side in the 1618 Fibonacci extension. From that comes in there at $14,157. Could that be the next upward side target, having retraced so far today nearly $1,000 away from that point? That means that, of course, that's quite a distance away. Of course, that's very close to where we saw the recent highs. The next target up could be conceivably 16,000, although we don't need to worry about that too much because we're currently operating within the land of charted territory already. So let's just zoom on in a bit and take a greater focus on what I wanted to point out here. This 236 zone, the grays, it would be grey if the background wasn't hidden. This grey zone, let me just get it more manageable, I don't know, something like that. This grey area up the top here, that's what I want to focus on today and see if we could be pulling back anymore. By the way, we will also be taking a look at Ethereum and seeing how it's performed. It's still kind of more or less going along as we anticipated in yesterday's show. It's lovely that the technical analysis here works out so perfectly all the time, every day. And we've been able to do that sustainably this entire year without putting a foot wrong. That feels pretty good to me, of course, and I think that's probably a good enough enticement to say that you should subscribe if you haven't already. But yes, back over to this Gemini chart. In fact, actually, no. Let's just tune in with what I was saying in yesterday's episode. Where's my big wedge? Yeah, the big wedge thing here. Now, of course, we spoke about this, talked about how we could be, testing outside this area. Then we've pulled back into it. So if we just wanted to say there was a first term target towards the top side, which is within the area that we've already been exploring with regards to price action recently, let's call this area 13,600 or so. That can be a key inflection area around about the top end of this wedge for us. Okie dokie. And as well, if we're looking for one that's just towards the downside here, it comes in at around about where that 236 fib channel comes in at there, about the 11,500 region. Should we drop down towards the downside, that of course will be no major surprise. This is of course the wedge which comes in from March up to the recent highs in October there. So of course the whole right hand side of things. Where did we come yesterday overall in terms of putting in a higher high or a lower high? Well, we did neither. We did an equal high, and that was perfectly in line with our A point target, which we spoke about in the video yesterday for the ascending, broadening wedge. How wonderful is that? And also we did make the comparison yesterday when looking at the Bitcoin CME charts and saying a key question: will we come in and equal the highs that we have here as we go into equal or higher or beat the highs on the spot prices? And lo and behold, look at what's happened. We haven't actually done that. The highs previously up there at 14175. Here we have the high having come in at $14,070. So we're $100 and below that previous target. That ties in fairly nicely with that other 1618 if that were to be the next target towards the top side of 14,150 we already spoke about. Great. So that's everything nicely covered in terms of the Bitcoin pricing fairly quickly. Oh, if you want to see the dominance chart, wedge still ongoing. Looked like we were getting a bit of a breakout yesterday. Ultimately, we pulled back into it. This is still happening for us right now. As you can see, the 10 period, which I've got on the chart at the minute, by the way, these things are the atomic nuclear magic numbers that I've set them to currently. 10, 18, 36, 54. If you're familiar with periodic tables, then you'll see those numbers. Let's just get up a periodic table, shall we? Images. Here's a periodic table for you. And you'll see these numbers coming in here. Ah, God, you can't see anything on that. Here you'll see the numbers coming in on this periodic table. Oh, everything's in a smaller image. There we go. 10, 18, 36, and 54. What is this? This is neon, argon. What's KR? And then Xeon, right? So anyway, that's the numbers that we're using. Nice one. Okay, back to the charts, and we can see then that the neon line is. I should have made those colors as well. Oh, there's an opportunity missed. Silly me. We'll do that next time, right? So we've got the yellow line coming up towards the pink line, and of course, that's very rapid. So we do have a very good solid shape here towards the potential for a turnaround and continuing up the way if we were to break out of this. But what's actually going to happen here if we, instead of getting carried away looking at the sort of the surface level stuff here, let's just remember that this brings all of this into contention again for crosses should we come back down towards the low side, and of course it just kind of gives these things a chance to boil off a wee bit and come back into a bit of more coherence in terms of their structure, having got very stretched out over there. Like they got very stretched out over here, came back into coherence, then they flipped over towards the downside. Maybe we need to see these go, a little bit to the sideways for a second or two first. We'll see how that all pans out in the end. But let's get back over to our channel. Where did we have the channel? It was on Gemini, wasn't it? On the stupid Winklevoss. So this is the area of concern for us. Let's just zoom on in and take a closer look. And we can ignore this. I'll just hide that Fibonacci retracement. We've already kind of covered that for now. Do we want to see what the let's just quickly look and see if we were to do a trend-based Fibonacci retracement. Of course, now we already know how this kind of looks because we've done it so many times in the past using various Fibonacci's. But let's just pop this on here using the latest information. This high that we had in August down to September lows up to these highs recently, and see where the prices would need to come in at to break past certain levels. And right now we've gone down to the 236, coming in there at 13,241. That's right now where we find the body of the candle poking around at the minute, which gives us a clear area to be able to say a couple of things for us. If we want to continue up to our next targets, to go to higher targets again, first off, we need to see the Fibonacci trend-based extension there fail at the well, it's my keyboard just broken during the middle of the video. I wasn't even looking at the screen. I only looked over at the screen because I'd done a typo. Damn it. That's so frustrating. Well, okay, look, we're just going to have to crack on. Let's stick the notes off to the side. I'll fix my keyboard after. Right, cool. So we've come down past this 13,241. If we want to see the prices coming up towards the top side, we're going to have to beat this 236 and create an invalid Fibonacci retracement tool object for us on the chart. Being below the 236 makes this valid currently. By the way, you'll be curious, I'm doing this on the 3-day time frame. I think that this is fair enough so far to be doing on the 3-day time frame. I will go down to lower time frames in a few moments. But as you can see here, this Fibonacci comes in here underneath the 236. That puts puts in 3 targets towards the downside. We're looking here at the 382 at 12,849, the 50% at 12,532, and the 618 coming in there at 12,215. That is, of course, another $1,000 down from where we are just now. If we were to do a Fibonacci retracement down to those areas, that means the 618 would be at an 11% retrace. Now, an 11% retrace isn't so much of a shock. Let's just dive over to the left here and check out the retrace that we had in September. That was a 20% retrace. That's twice as big as what we've seen so far. What are we doing at the meantime? So then that question becomes down to how will this structure, if we did see this play out with a 236 valid Fibonacci with a retracement then thereafter, what are we looking for should the 236 remain unbroken, right? That's what the question is. We've led the narrative to this point ourselves by the nose. Let's jump on down to the 4-hour time frame to put this in a bit of context for us. Well then, imagine that we had this here then being our high, and currently we see the prices coming in at around about that 13,241 level, just here where we have this red zone. Now, if we don't actually manage to break into this red zone and open daily candles up and above it, so it was on the 3-day, if on the 24-hour time frame, if we're not opening and closing daily candles above this area, then what it starts to look like is that we could potentially be having some sort of rise. If we have a rise back into this area but don't actually manage to close any of those candles out, then going down to the 4-hour time frame, what it means is that this area over here on the left could potentially become a shoulder. This could become a head, and then of course what we could see would be a subsequent shoulder over here, which is what then really makes this line crucial to close above. And that's looking from the 3-day down to the 24, down to the 4-hour time frame, and looking at the structure and the pattern potential for us if we were to do that. But let's look up a bit towards the weekly time frame and bring up the oscillators from down below. Now, what do we have here? 2 things to be aware of, and I spoke about this already, quite a bit of detail. In fact, in the live show yesterday, it was really detailed on it. What we have here is a quick let's just hide all that. We have an area where we had a high here on the 10th of August over there. Then we have had a subsequent high come in. And the anchor point for this RSI is just here, where I'm pointing just now on the screen. And that is, of course, matching up with the 10th of August high. And we've so far gone up a little bit from there. If we see the prices drop down and then close this week somewhere in those 12K areas, then this angle will stop being like it was. Well, yesterday it was more like that. Today it's like it is now. And tomorrow, what could it happen? Or the next day, if by Sunday it starts to look down that way, then what you'd actually have would be weekly bearish divergence here between this high and the high in August, looking at the charts. But what's the elephant in the room right now? What's the elephant in the room? The elephant in the room is this guy here. As you can see, his eye didn't really work. There's an eye for him. Is this guy over here. He's the elephant in the room. Let's acknowledge the elephant in the room, shall we? Going back up towards the weekly time frame, we now have had equal highs coming in here. Equal highs with very much distinctly lower action here on the RSI. That puts you in for weekly divergence here. This is the sort of thing that you'll see Carl Lemon talking about in about 3 weeks' time or so. As is usually the case. Also, just like it was when we talked about the monthly divergence here, looking at the monthly chart, is that still the case, by the way, given where we've come from and everything else? Well, looking over here, we're higher than we were in our previous month. Pullbacks down the way could see the angle of this thing obviously change and reinstate that divergence that was there before. So that's why this whole area becomes quite crucial, and that's again why that 236 area becomes quite crucial just there for us. on El Chartios. Oh Chartios. So those are our downside targets, and those are our upside targets. That was us just looking at the big time frames. You might be wondering, how can you make such a comparison between such a distance which is so far away? Apologies to subscribers who already know this and are saying, well, we know that that's within tolerance. Sure, look at if we were to make a comparison between our high here and our previous high, by the way, which is also bearishly divergent on the 24-hour time frame, that goes back 76 bars. If we go up to the weekly time frame and want to make a comparison between these two areas, how far back does that go? Let's just draw it in. Oh, look at that. That goes back 69 bars. That's less than the other area. We know that's within the sort of tolerance of looking at divergences and stuff like that. Also, quite clearly, this is what we're looking at. Now, what else could evolve then at that point? You know, you could have a big cup with handle, for instance, here on the charts. Now, does that make sense with the volume profile down below? No, it doesn't. Neither does that head and shoulders that I was speaking about there, by the way, just now, so far, as it looks like. But if you were, then what you'd be talking about in terms of movements is quite easily described, really, because the Bulkowski textbook will tell you that a cup with handle could come down to as far as the 50% retrace area for the handle section. You're looking for it to at least come down as far as these areas here, though, in the meantime, which means that you've got three targets if you were looking at a cup with handle for the actual handle section, and that's 11,500, 10,000, and 8,799. That's horrific, this 8,789 area. If we were to come in there and push past it, then of course the 618 becomes all important. You'd no longer be looking at a cup with handle at that point. Instead, you'd be looking at just, the trend and asking the question of, would we get a higher low coming in here for to continue this on? Because then that would make a low, a high, a higher low, a higher high, and a higher low. And you'd be asking questions about these final four sections on the Fibonacci retracement at that point, if that were to happen. So zooming back on into the small term time frames then, of course, because people want to know where it's going now, what's happened next. So what people always want to know. We have this concept here currently, but really what we need to look to is whether or not we could see the prices sustain themselves above or below these wee term moving averages for just now. Let's hide all the drawings off of here again. Assume the price action back in a bit again. I've already done enough pointing out of recent times about the oscillators down below. I just put the MACD back on today. The reason I put it back on was because I wanted to show you that we'd had a positive cross on the MACD there in the run up to this high just here. After we broke up past 13,400, we got in and we put in that high and then immediately crossed again there afterwards. I just want to point out the fallacy of the crosses yet again for people with regards to this here recent price action. This is a 4-hour time frame. Got a negative cross here, which is coming in at this price action here. Then what did we see? Well, we saw the prices go up thereafter, so that was rubbish. We got a positive cross in here, which came in at this price action, which we did see the prices go up. But, in terms of being able to trade this thing, if you're looking at taking a long position from there, you'd have had to have had very, 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 very tight stop on there in order to get a decent risk to reward ratio. Very tight on that one. So, you got stopped out essentially in the next candle. So it failed is what I'm saying on that one. And then you move towards the downside, and I could do this on every single time frame just so that people know about these things. Now that I've made that point on the small time frame, though, let me just go up towards the 3-day time frame and point something else out for you, which you may find of curiosity value. We had a crossover here just at this price point back here where we saw the prices come up the way. Then we moved up towards the top side. If this were to pan out the same way as that cross did on the 4-hour time frame, then you're looking at coming back down to this target over here. Okay. Scary. Cool. Anyway, now I can afford to get rid of that. Having made this point again, I never use the crosses on the moving on these things. I just get rid of the MACD and the signal line. Instead, I look at the histogram for you, a little bit of information. But of course, at some point, I will talk about the benefits and whatever, maybe if I do a course or something, but as a quick tidbit, get rid of them. Easier life, better lead. So that's what we're looking at. That'll cover us up for Ethereum just now. We've kind of done everything, but we did talk about we'll cover up for Bitcoin just now. We've got a lot of mess now on the charts. I haven't drawn all this in, but you can still see that there's a few things there which are kind of screaming out at us. If I just remove the background stuff so that you can see everything a bit more clearly, give me that. whatever. We've got the moving averages above our heads. On the 4 hour time frame, we're below the 10 and the 18 over here with these nuclear numbers. So we're below these two. Could we go down to the 36 and then of course the 56 thereafter on these time frames? Looking at those in terms of numbers, you're talking 12,850 if we were to go down to that point. Of course, if we did, then if the number 10 would be screaming down the way, having crossed over the other ones. What we're looking out for is the slope and the crosses in this in terms of the short-term warning signs for us. And let me be clear, we've not had a cross here between these two, and we could come in, simply put in a higher low and trend towards the top side. In the face of this bearish divergence, that's clearly 1, 2, 3 points of it here on the 4 hour time frame in this structure, which is an ascending wedge of some sort. Looks to me to be like a ascending broadening wedge, and we can see that there is divergence on the MACD to chime in with that as well. And on the stochastic, no, not on the stochastics just there, very much negatively stochastic though, let's be clear. And we have the potential for a negative trend to kick in here on the 4 hour time frame should we not see things move towards the top side, so moving down here and crossing these over would be fairly negative. And then of course that's your early warning sign. Use that as your canary in your coal mine if you like. Let's just check how long is this episode going. 20 minutes. Whoa, that's not what I wanted. Here we go. Ethereum 390. What we've seen happen here is the this diamond structure, which in terms of what we have just here looks like a symmetrical triangle, as they do. If you want to look up what you're talking about in terms of the textbooks and everything else. So what we could have is a target for us towards the downside at 380. We've actually been down as low as 386 today, down below 390. We know the key areas for us, 396 for instance, where we have Fibonacci retracement point. If I just zoom up the way, show you that we have indeed got this Fibonacci in it around about those tops. Is off by a pixel or two, still am, whatever. 396 is that key area where we have the top end of our ascending triangle. Zooming on it a bit so you can fit more price action on the screen, and you can see that we've come down the way, putting in lower lows. At the minute, is this we've got the most positive thing for us is to say that this lower low that we've just put in just now is divergent. If we're looking at this as a downward trend since the 22nd of October, which is what that actually is, and we can see that this is divergent, bullishly divergent. So what that means is if we take out these previous areas of the 396 and move towards the top side, maybe we get some positive follow through and can challenge the top areas again. First target towards the top side 411, but if this actually just simply gets continuation and moves on down, then that will boil away fairly easily. That divergence is visible on all of the oscillators down below though when we're looking at regards to this low. So low targets, of course, 381, pushing on from there we're looking at 411, 410, and then zooming back out again, what this actually, the structure of this thing stands as is a diamond. These are not very particularly common patterns, but this is what we have here is a diamond, and the top side movement from it could take you up as high as the 550s area. Let's look towards that 1.272 retracement area, but the lows from it take you down to 230. Of course, positioning yourself within this structure in order to play either of those moves would be unwise, definitely not the prudent approach. But there we have it. If we were to move outside of it, fake out zones come in here quite clearly at the 368, 618 Fibonacci retracement zone in there at 350, and that would be our fake out territory because it takes us down to the ascending triangle aspect of things. Maybe I need to group these together and hide and show them. I'll do that between the next couple of episodes or whatever. The key areas remain 395, 425. Well, that's what they were before. Is my keyboard just going to suddenly start working? No, it's still not working. So I would update these, to say so that the key areas, what we just spoke about, going to be 380 to 410 currently in terms of what we're looking at. But of course, these really remain the sort of are we turning things back around key areas. Fibonacci zones spoken about, retracement spoken about, patterns both spoken about, 24-hour timeline covered, 4-hour timeline covered. We're looking here at the same sort of scenario with regards to the small moving averages here. These magic numbers, if they start moving down the way they are actually slanting down at the minute just slightly, we could see, of course, a series of crosses happening and whatever, and those might give us early indications if we want to aim for targets. Any of these is extremely tradable. Moving towards the full, planning to trade like maybe Carl might suggest you to do, or some others out there, 99% of YouTube TA people suggesting that it would be, somehow wise to trade up for those areas right now would be is definitely getting ahead of themselves. There's plenty of trading to be done. Just take out the measuring stick, go from where we said was fake out zone, and that's just breaking down past this. It's not where the current prices are, down to the 618. You're looking at an 8% move. That's more than enough in terms of just making small trades. If we go from where we are right now up towards the previous important area of 425, then we're looking at a 10% move towards the top side. You don't really need to get any more carried away than all that. Let's just then take a quick look at Ethereum versus the USD. Same chat as we had before. This is all just lasting on since that Ichimoku Cloud episode, with everything being the same. The MACD, now that I have it back on here, shows that we are potentially in a wedge, potentially, or at least the starting of one. Look out for that. Ethereum, Bitcoin, we've come down here. The target so far, we always had this intermediate target here of 28. We've come down so far to 28.79. So you could say in some senses that we've had our target reached. We've broken down past this area. Is this adjustable to accommodate this price action? Now we've got to the point where we'd have to start being really sort of generous with it, saying, let's just use bodies. We can cut through wicks, but we'll just use bodies, and then line this up here at the minute with this one. If you want to be super FOMO optimistical-tastic, then we're looking for a turnaround at this 50%. Otherwise, the clear target for us is down here towards 24, 25, 0.0025. With this one, with regards to the patterns and everything we've had on here, this is just all going exactly as we said it would do. Thanks so much for tuning in. Really do appreciate it. Be sure to share this video with your friends, like and subscribe, hit that subscribe button, hit that join the Discord button. There's one in the link in the description. And yeah, good technical analysis, eh? It's been fun. Thanks so much. Oh, there was one thing I was going to do. That was the thing, right? Okay, so people who subscribe to this channel know to stay past saying cheerio. This is the one thing I was going to do that I haven't done actually already, just to put all of this into a bit more contrast for us. Let's take this top line here. Have I got another clean chart at the minute? I don't have another clean chart, do I, with Bitcoin? I can do it on, I'll do it on this one since it's relatively clean. And it's interesting dynamic. Let's just take one of those fib channels up here. Now, there's a couple of areas where you could look to try and draw in from. Would we use this high? Would we whatever? Well, actually, funnily enough here, the gaps on the chart make it quite easy for us to see where we can take this from and be more or less happy enough with its structure and pop it in down here. And we can also then just say that the lows down here towards the lows in March, where we found ourselves coming down to, etc., etc. And where does this Fibonacci trend-based channel bring us in at just now if we're looking towards these numbers going across the right? So 236, 382, 50%, 618, 786. We're looking down to targets so far of 13,170. That comes in at about where we have our 236 at on here as well in terms of this Fibonacci retracement, which is no surprise to me. The next target thereafter is going to have to be down there towards the 13,060 down towards 12,500 area for that 382. Then of course, then the next targets come in down here towards the 382 on this Fibonacci retracement, and the 618 and 50% zone on the fib channel, and we're looking in this general area here of the 12,500s. Then the next general area here over this area, and then the next general one over here in this area, if things were to go along with the normal sort of time-based distribution that we've seen so far with the price action. So you'd be looking here and saying that by the 30th, by Christmas time, if we come down to 11,465, that would be a really nice price to lift off from to go up towards that 14k target then thereafter for the January, February, March pumps that we're used to having seen over the last few years. Okay, cool, nice one. Finishing off now. Ciao, ciao, ciao. Thanks so much for tuning in. Really do appreciate it. See you next time.